When we think about the success of crypto, it is typically measured in one thing. That one thing is price action. If Bitcoin is trading at new all-time highs, if old coins are trading at new all-time highs, crypto must be a big success, right? And I think that this is where almost everyone is getting the big picture wrong. Because again, these aren't stocks. Like when we think about stocks, obviously we look at stocks, and if there's a good financial report, and if revenue is looking very good, their product is selling, then obviously the price of the stock is going up. And I think that this is how everyone views crypto as well. They think, well, if all this good news is happening, why isn't the price action going up? And the issue with crypto right now is that, well, we're still tied back to Bitcoin, we're still tied back to hype and speculation, but that is changing, and I feel as if almost every single thing that we are seeing from major players, even like the CFTC, we're starting to see that shift happen in real time from a hype and speculative sort of market to a much more mature and serious market. And that is exactly what I want to talk about in this video, because what the CFTC just announced is huge for crypto. But first, let's talk about XRP slightly. Mainly, I just want to address price action in the market. Earlier today, I was talking about HBR. I was talking about Bitcoin. Looking at this on the 24-hour view or even on the 1 week, things don't look as though they're improving at all, right? But if we look at the 4-hour view here on XRP, we can see that we are trading in an uptrend. Now, XRP could easily still retest this trend, and that would be right around roughly like $2.03 or so, might even have a wick below it just like we saw on the 21st. However, we are in an uptrend right now. We do have higher lows. I would love for this to be maintained. And then the main thing that we're looking at is a new higher high. That way we create bullish structure. And again, when we think about XRP selling off or, the price action isn't looking all that well, guess what? That means that XRP must be a failure, right? XRP is a trash coin. XRP, isn't doing anything. It's just selling off. But it's such a terrible way to view, success or failure in this market. Because again, we have yet to hit the utilization phase of crypto, but we are building a path towards that. Now I want to go over a few things. Let's first start off with the major shift happening around legislation, because again, the market is looking very good. I do think that we are starting to improve, think that we're starting to bounce back. We obviously still want to focus on lower time frame structure for it to continue to flip bullish. We need to have those higher highs. But I think that so far the month of December has been starting off with a pretty good view of where we're headed. I think that we're starting to recover. And of course, with liquidity improving, that's definitely going to help. Now, the biggest thing is, of course, what's happening around legislation, because on December 3rd, we got a big update from Eleanor Tourette talking about at a crypto-themed Christmas Bash Tuesday, Tim Scott floated 2 dates for when banking GOP might hold a markup of its market structure text and shared where they stand on votes. Now it seems as though we're not getting market structure in 2025. It feels as though it's getting pushed into 2026, especially with vacation and with holidays and things like that. However, there is a realistic path to having a markup on December the 17th or the 18th in a committee with the votes to get it done. I believe we have 13 Republican votes. There are 2 or 3 already on the Democrat side who say they're a yes. So again, it would be right in time for, members set to go out of town for the holidays on the 18th. This would be marked up by that point. And then going into 2026, it seems as though we can get this fully addressed and signed into law. So clarity could become a realistic thing in Q1 of 2026, which was always my view anyways on this. Because, with the shutdown and things like that, with all the delays, I figured we were going into 2026 anyways with this. But this is definitely a big one to focus on. Now, talking about clarity and talking about the big regulators in the room, the SEC, Paul Atkins. Back in September, we got an update from Paul Atkins talking about the harmonization of the CFTC and the SEC on regulatory harmonization. Essentially these two coming together and working on crypto, legislation and regulatory moves. This is something that we floated around for a while, since going all the way back to the SEC lawsuit. With Ripple, we've always talked about at some point in time. I don't think that the SEC is going to be the main show. I think that we're going to see the CFTC and the SEC work together. In fact, everyone was asking for these two players to come together and work on legislation with CEOs from the space. Now, we do know back in the summer, the CFTC said that they were looking at comments from major CEOs in the space, for, a good sort of guideline, if you will, to proper regulations for crypto. And I think that that's the best way to go about this, because that ensures that innovation continues to thrive. And of course, nothing is held up and we can have the space operating in a regulated way, but in a very efficient way. Well, since then, we've started to see a big shift in the regulatory side of things as well as the legislation side of things. But the CFTC is 100% a big focus here. But so is the SEC. On the 2nd, we got a big update from Paul Atkins. He said that the agency has enough authority to advance crypto regulation without waiting for Congress, and plans to unveil an innovation exemption for digital asset projects within a month. This is going to be big. And again, this is also showing us that the SEC is committed to making sure that crypto thrives. On top of this, we just heard from Paul Atkins on Fox Business. Here we have tokenization isn't coming, it's here. Paul Atkins, SEC chair, just went on Fox Business and called tokenization the way the world will be. Not in 10 years, but maybe in just a couple. After years of the SEC standing in the way of innovation, he's now saying regulators must embrace it to keep the US at the forefront of global markets. The quiet part was just said out loud. The modernization of markets isn't optional, it's key to survival. Big shout out to Crypto's RS for this. Check it out. Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization? Oh, absolutely. And it's the way the world will be here in the mean, maybe not even in 10 years, maybe even a lot less time, maybe a couple years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here, recently, it's been almost standing a fort. The marketplace, all these new innovations were coming about. So that's no more. We're actually embracing it. And I believe that we need to be embracing it to keep the United States at the forefront. So listen, tokenization is obviously like a huge focus from every single regulator, but also from every single TradFi giant. I mean, if you can name a big name, Citi, Bank of America, JP Morgan, even organizations like the DTCC, or even the IMF, or even SWIFT, they're all talking about tokenization. That's because it is the future. Now obviously, this is from Paul Atkins. What about the CFTC? What did they announce? Well, here we have CFTC fam announces first ever listed spot crypto trading on US regulated exchanges. This is the CFTC unlocking the door for some of the biggest players to enter the crypto space. Here we have from Caroline D. fam, you can now trade listed spot crypto on CFTC exchanges. We are working smarter and faster to protect Americans who deserve safe US markets, not offshore exchanges.